Hello, and welcome to Quilter Cheviot's Markets Uncut podcast, your weekly insight into the topics and trends that we have been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you are listening on, or alternatively by following hashtag QC Weekly Comment on LinkedIn. I'm your host, Oswald Oduntan, Investment Manager for the Managed Portfolio Services, based out of our London office. And this week, I am pleased to be joined by regular podcast guest, Richard Carter, our Head of Fixed Interest Research, and Healthcare Equity Research Analyst, Sheena Berry. Now, last week, the FTSE 100 hit a record high, which was a welcome change from the usual news of US indices dominating the market. This happened when UK stock market has been unpopular relative to peers, as companies either choose to list in the US or wanted to leave, as Shell's CEO recently suggested they might drop their London primary listing to move to the US. However, with being out of favor, the UK market is also an attractive place for those looking for value, shown by the recent takeover offers for the likes of DS Smith, Anglo American, and Darktrace. Richard, let me start with you. This latest performance seems to reflect the FTSE 100's composition of more defensive and cyclical stocks, which are favorable in this economic environment where hopes of lower interest rates seem to fade with each passing week. Is this a sign of change in the UK stock market after all these takeovers, and what will remain of it?
Good question. I mean, I don't think it's a massive change. I mean, I think, the UK market, in contrast to the US, has always, has been a bit more of a value index and has been doing, if you cast your minds back to 2022, when interest rates were rising and inflation worries and all the rest of it, UK market did a lot better than the US. And we've seen a sort of, mini repeat of that in the last sort of few weeks with bond yields rising, inflation concerns still there, and commodity prices picking up as well. And the UK's benefited from that. So I guess in some ways that's a bit, as I say, a bit of a repeat of what we saw in 2022. I mean, I think it's it's a good headline for the newspapers and everyone else that the FTSE's hit an all-time high. But I would say, a couple of things. Performance has lagged some way, but behind global indices, particularly the US, over the last few years, and that's not changed just because it hit an all-time high last week. And also, there's always a bit of a fascination on the sort of level of the FTSE and all the rest of it. But if you look over the last 5 years, most of the returns on the FTSE for investors have come from dividends and not actually price appreciation, the overall level of the index. So, I think we shouldn't get too carried away with this, but I guess it's good news. In terms of all the takeovers and all the rest of it, all these companies that are doing well in the UK seemingly disappearing off to the US or getting taken over. Yes, it is disappointing in some ways, but fortunately, we can invest globally and often the best opportunities are outside the UK. So I'm afraid. So at least whilst it might be disappointing sometimes, at least we've got plenty of places to invest.
Thanks, Richard. And moving on to the macro environment, there's also the belief that when the major central banks lower the interest rates for the first time, they will keep going down. Can you comment on the difference in policies and rate expectations across major central banks at the moment?
Yes, I mean, with the central bank expectations, everyone's talking about when's the first cut going to be. Obviously, people aren't just expecting one cut, or if they were, what would be the point of them cutting interest rates in the first place? So when inflation sort of is finally under control, and if growth slows, you would expect to see a series of rate cuts from central banks, just as we saw a series of rate hikes. But certainly the narrative over the last few weeks has been, inflation pressures are still pretty sticky, and the idea that the central banks are about to start cutting rates and cutting them aggressively has sort of gone out the window for now. And the first rate cut, the expectations for the first rate cut, certainly in the US, keeps getting pushed back further and further. And we had a few comments from ECB officials recently saying, listen, we might start cutting rates at some point, but don't expect us to move too far. So markets get that, but That said, you would expect to see, as time goes on, a few rate cuts. And at the moment, the market is expecting the US to be at 4.5% at the end of 2025. At the moment, it's just about 5.25%. So that's a very, very gradual path of rate cuts. And in the UK, it's expected to be about 4.2% at the end of 2025. So a bit more aggressive than the US potentially, but still, a fairly gradual path is what's priced in at the moment.
Thanks, Richard. Sheena, moving on to you and taking a step away from the macro environment. We're currently in the middle of earnings seasons with big companies announcing their results. Now, the expectation for the US companies is quite high, and a lot of market analysts are expecting these companies to beat market estimates. And that is seemingly higher than those in the UK or Europe. But how did the healthcare stocks you follow perform, and what is the market's response?
Yeah, so of the healthcare companies that have reported so far, I would say it's generally been a better than expected quarter, with 2024 off to a pretty solid start. And this really comes after what was a more mixed fourth quarter, and it's also generally better than Q1 last year. So in pharma, AstraZeneca, Novartis, Sanofi, and US Merck, they've all reported so far and all had strong Q1 results ahead of expectations. The share price reactions were favourable, with AstraZeneca, for example, shares up over 5% on the day. We have actually also had some positive top-line data from one of AstraZeneca's cancer drugs called Uncut in a form of breast cancer since the results, and that very much supports the growth expectations for that drug. So for AstraZeneca now, the focus is very much on its capital markets event on the 21st of May, and we will gain some more insight into the pipeline and some longer-term financial targets. But Novartis and Merck, they actually also both upgraded their full year guidance slightly on the back of the better than expected Q1. Merck's key cancer drug Keytruda, that continues to deliver impressive growth. That was up 24% in the first 3 months. And the group is also now in the process of launching a new drug for the treatment of a form of blood pressure in the lungs. So it'll be interesting to keep an eye on its progress as well. We've also had some of the life science tools companies report so far, such as Danaher and Thermo Fisher Scientific. Now, this subsector actually had a pretty challenging 2023 due to bioprocessing headwinds and more cautious customer spending. So commentary around how these dynamics were playing out, was of particular interest. And it was encouraging to note that the biotech funding environment is improving, and we are getting some China stimulus, which should really help support better market conditions. So this did provide a relief to the share prices of a number of companies within this space. But, Q1 results aren't over yet. We still have quite a few companies to report, including GSK and the big 2023 pharma winners, Novo Nordisk and Eli Lilly. So still lots more to come.
Thanks, Sheena. And just on those big pharma winners, Novo Nordisk and Eli Lilly, both have been at the forefront of developing their weight loss drug. Do you think that the competition to create the best weight loss drug will go on this year, or are there other things in the pipeline?
Yeah, so, Novo Nordisk and Eli Lilly, as I mentioned, they both performed very well in 2023. And there is really an emphasis on a few select drugs. So that's Wegovy in obesity and Ozempic in type 2 diabetes for Novo Nordisk, and Zepbound in obesity and Mounjaro in type 2 diabetes for Eli Lilly. Now, the sales potential for these drugs, is significant. And what we've been seeing that demand has been outstripping supply. So when these companies, when both Novo and Eli Lilly report their Q1 results, we will be looking for an update on the supply dynamics to just sort of see if that's unlocking to help with the growth potential. But going forward, there will still be a lot of focus on the weight loss market. There's a very high willingness for individuals to pay for these drugs out of their own pocket. So Novo Nordisk, for example, announced at its Capital Markets Day in March, that 7% of the obese population in Denmark are actually already on Wegovy. But Wegovy and Zepbound, so they have demonstrated good weight loss in their clinical trials, but there are side effects, and the quality of the weight loss, can still be improved. Because at the moment, users are losing fat and muscle, and generally speaking, the weight is put back on once individuals come off the drug. So what we're seeing is that the next generation of weight loss drugs are being worked on. Both Novo Nordisk and Eli Lilly, have newer assets in the pipeline. Wegovy and Zepbound at the moment, they are sort of once weekly injectables. So what we will see potentially from the next generation of drugs, they'll be looking at efficacy, reduced side effects, better quality of weight loss, and potentially different dosing and methods of administration. There are also other companies working on weight loss drugs, such as, Pfizer, Amgen, Roche, and AstraZeneca, and they're either doing that sort of on their own or through partnerships, and they're all at sort of various stages of clinical development. So the weight loss drug market, that is something we will very much continue to hear about going forward. So I'm sure we'll hear a lot more as we progress.
Great, thank you. And thank you both for those great insights. And thanks to all of you for listening. Did you enjoy our discussion on the podcast today? We'd love to hear from our listeners. So please review the show now, wherever you're listening, and share it on your socials and tag us at QuiltAchieveIt. To make sure you don't miss a future episode, tap the subscribe button. And we will be back next week. In the meantime, head over to our website at www.quiltachieveit.com, where you can read the accompanying market overview, as well as subscribe to our weekly comment newsletter. You can also stay up to date with our thoughts on market news, industry insights, and our upcoming events and webinars, all on our website or on our social media pages. And finally, do you have any questions you'd like one of our experts to answer for the next podcast? Simply ask them via the weekly comments page on our website. We'd love to hear your questions. And that's it for today. So thank you, Richard and Sheena, for your time, and all of you for listening. See you next time.